My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make you some money. My job is not just to entertain you, but to educate, teach, and put this in context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Now, you wouldn't know it from the sedate action, the averages. Dow advancing 62 points, S&P edging down 0.04%, Nasdaq declining 0.25%. But this is starting to feel a little bit like a Kenny Loggins market. Yep, we're on, I'm going to say it, the highway to the danger zone. All right, overly dramatic, I know. But you know what? I watch froth. Okay, froth really matters to me. In a frothy market, stocks will have enormous rallies that are totally disconnected from the underlying fundamentals. You get enough of these moves, and you have to take something off the table. Because just like when you pour yourself a beer, the froth doesn't last. It's a sign that people are getting too greedy. Remember, I always have said it from 16 years now. Bulls make money, okay? Bears make money. But hogs, they get slaughtered. And right now, this market's starting to stink of pork. What's got me so peeved? Let's go over it. All right, first of all, is it really that hard? The SPACs, especially the celebrity SPACs. These supposedly can't-miss ideas are becoming embarrassing, frankly. Michael Semblis, the brilliant chairman of market investment strategy at J.P. Morgan, wrote a devastating critique of this group earlier this week about the economics of these special-purpose acquisition companies that you're all playing in. If you start a SPAC, you're golden. If you buy a SPAC as an insider, you'll do fine. But as it kicks down the road, the food chain, it turns less and less valuable. Aside from a few superstars like Virgin Galactic and DraftKings, the public investors aren't getting particularly good returns already from these things, at least relative to other assets, and it's going to go bad. And those are the good SPACs. These SPACs merge with startups, allowing them to raise cash and come public without an IPO. But the best merchandise has already been snapped up. There are only so many great electric vehicle plays. The SPAC cycle is just like an IPO cycle that I always tell you about. The best ones come first to get you involved, and over time they get steadily worse, and then worse, and then worse. And I got to tell you, there's no break in sight. Like I told you last week, the whole SPAC complex feels like one big bad inside joke, where celebrities who've never really run a business in their lives are pulling down big bucks, hunting for some takeover targets that will keep the frothometer spinning. Today I heard about a SPAC for flying cars. Hey guys, pigs can fly too. Second sign of froth? Cannabis. All right, here we go again. Didn't we watch this overhyped industry blow up once already? Sure, it could potentially be legalized. Maybe the financial regulations will get less punishing. It'd be more credit, less cash. But none of that's a sure thing. And these stocks have become ridiculously valued overnight. I have been right. I still believe in Canopy growth, though only because it has a terrific parent in Constellation Brands, and it can make great taste, no-filling cannabis drinks at scale like none of the other companies. Most of these weed plays are destined to be nobodies, but it doesn't matter right now because they're all connected by the same ETFs, and they're all heavily shorted, and it's just one after another flying crazy. And that's part of what is the next cohort that I don't like, the short squeeze stocks, the ones that get pushed out because we've got a whole new, exciting generation, of marauders out there looking for any stock with a high short interest, even if it's part of an arbitrage spread, meaning it's not even going to work. The pot stocks qualify for this treatment, too. If they can turn into a meme, then they think they can take it to the moon. Yes, it's novel. It's interesting. Except for I've seen it a lot, and it's not novel. It goes bad. What's causing the froth? I could blame the Fed. Everyone wants to do that, right? Or the free money we're expecting from the stimulus, another blame. Or the excitement about reopening once everyone's vaccinated. That is a big deal since I did get vaccinated today. I want to thank the great people of Staten Island for allowing me to get vaccinated. The truth is, it doesn't matter why it's happening. I just want you to acknowledge that some parts of this market are at truly insane, absurd levels. Because I wouldn't be doing my job if I didn't point this stuff out. And I didn't want to do this piece. This is a really great day. And I didn't want to stand here and tell you, you know what, I'm getting nervous. So what do you got to do about it? Well, first, you got to understand, we've had nearly 11 months of incredible gains. And nobody wants to leave the tables when they're this hot. Nobody wants to hear some old codger like me tell you that profits don't count until you ring the register. I know you don't want to hear it. Or that these kinds of returns are an anomaly. You don't want to hear that. The kind of thing that sucks you in and never lets you go because it's so darn intoxicating. You don't want to leave because it's the money tree, and you want to climb it, and you don't want you pulling down it. You don't want me yanking you from the money tree. Already, I can practically hear some of you saying, he wants me to leave? He's got all kinds of money himself, that guy? And he wants me to cash out? What's his angle? All right, listen, there's no angle. I've been in this game for 40 years. I've seen this before. Whenever we give them these red-hot periods, they're impossible to resist, and they always last longer than any of the grizzled veterans thought possible. I think it's going to keep going on, but eventually it does end, and you got to be ready. You know why so many people lost money in the dot-com collapse 20 years ago and then never came back? Because there was new merchandise created every day that was sizzling and exciting, and it went up almost automatically. Because there were companies with no earnings or sales, just eyeballs. I used to call them the ophthalmological wonders. Because a huge part of that market had divorced itself from the fundamentals, or there were no fundamentals to begin with. At the height of the dot-com period, and we're talking here between 1999 and 2000, 330 companies came public, and only a handful of them managed to survive. I know. I started a survivor company during that period. I was stunned that something like 97% of my colleagues who did companies then failed for stuff that was loved just a few months before. So you got to be careful when it gets this frothy. But, and this is crucial, I am not saying get out now. I am not saying sell everything. I am simply begging you to exercise some discipline and sell something because nobody ever got hurt taking a profit. I don't want you to sell everything because, first of all, it's an excellent setup, as they like to say. Sure, the unemployment rate is way too high and COVID's still out of control, even if the numbers are coming down and we're doing much better with the vaccine rollout. However, those negatives are the reasons why the Federal Reserve won't raise interest rates. That means both the Fed and the tape, the action, are on the side of the bulls. It's not even worth fighting yet. I'm just trying to say that you're not a genius if you've made 50% in a month or a week or even a day. You're simply participating in one nutty, unsustainable moment of a part of this stock market. It's not you, people. It's the beast that's making the money, which is why you got to take something off the table. Second, just like in 2000, there's a whole other market that's not reasonably, let's say there's a whole other market that's actually reasonably valued. Let's do that. I'm not always going to say cheap, but it's good. When I was getting my second shot today in a tent in Staten Island, fabulous operations leader spotted that it was my birthday. The staff broke out with spontaneous, rousing, happy birthday song. The tears of happiness were this close. They were this close. They're about to flow. So the guy behind me goes, hey, Cramer, I never miss you. What do you think of Merck? I said, I don't know, Merck. It sells, it's 12 times earnings, doesn't have a lot of growth, 3.5% yield. And I said, he says, but you want me to stick with the J&J? I said, no, I like the J&J, but how about the Bristol Myers? 8 times earnings, 3.3 yield. He said, I don't know. I said, well, how about Walmart? Didn't have any. Walmart. Got his app out. He says, yeah, I got to get some Walmart. You know what? That's okay. That's still a good conversation. It's reassuring when people ask me about steady Eddie drug companies and not the froth that it hasn't gotten too insane. That's a good conversation. But when they tap me and say, hey, Cramer, how about the flying car stocks? How about space tourism? We're getting out. The reasonable market is still in charge right now. But sooner or later, at that pace, it's going to change too. Bottom line. Yes, you have to make hay when the sun shines. I want you to do that. Just remember, stocks ultimately are pieces of paper. And Wall Street will keep printing out those pieces of paper until the buyers run out of firing power, at which point the buyers will be steamrolled. We are not there yet. We are not. But if there's one takeaway from the frothometer, we are most certainly headed in that direction.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.